Hey guys, Tara Ryan here, and today's tip from Tara is about non-QM loans. Well, what the heck is that? Well, I'm going to give you the headline of the new product offerings that we have and when to think of us and how it may help you get more buyers into homes. And then I'll do a little bit of deeper dive on what those words mean, a little bit more about the types of loans, and we'll do follow-on videos to really double click in and do a deep dive on some of the loan products. So, first of all, what are we talking about? Um, I have historically stayed away from loans where I don't control the timeline, right? Why? Because my commitment to you is that we're going to close quickly, smoothly, and on time every single time. And so, brokering loans to an outside investor, you don't know how long they're going to take. Right? And that can derail your closings. So, to keep my commitment to you to honor those timelines, we don't do that type of thing. But now Fairway has brought in, and we are underwriting in house a whole new host of products, which is great news for both of us. So, that includes bank statement loans, something called a 1099 loan, where instead of the 1099 person being self-employed and now we have to use a tax return, we can use the 1099 directly. Bridge loan we have in-house, as well as DSCR loans for investors. And there's some other details in there. For example, somebody who's had a mortgage late in the last 12 months, they don't qualify for a standard Fannie Freddie, but these alternative products might work with a client like that as well. So the bottom line headline to you, if you want the short nugget, is Tara's got more products to help you and your clients. So send them over and we will help figure it out and get you a solution. Now, a little more deep dive in what these words mean. So these types of loans are referred to non-QM loans. QM stands for a qualified mortgage. So, back after the housing crisis, when Frank Dodd legislation came into place, one of the things that lenders were required to document was required to document the borrower's ability to repay. So that meant we have to get the income documentation. We have to calculate the DTI. We have to get to those nitty gritty details. And what that afforded the banks then was protection from liability from borrowers. If they fall into hard times and it has a foreclosure, they're protected from lawsuits from those borrowers. They're able to still proceed on the foreclosure because they did all the things up front to show that borrower at the time that they gave the loan qualified and had the ability to repay. Very strict requirements. A non-QM loan doesn't afford the investor those protections. So that's why the interest rates are going to be higher. These are a little bit riskier loans. They're going a little bit outside the bounds, and there's less liability protection. And that's why then without that protection, you've got to charge a little bit higher interest rate, but we can be a little different in how we look at things like income. All right, so the bank statement loan, we're going to look at deposits into the bank account instead of the tax return after deductions, right? So we're going to look at the revenue going in and apply an expense ratio to that. And that might work for a borrower whose CPA may be super aggressive and has written off all their income, right? Even beyond what might be real. Okay, so a bank statement loan is one option. A 1099 loan, as I already stated, we're going to look at what's the amount that you got paid in 1099. Realtors, this is perfect for you guys. Apply expense ratio to that. Again, it helps for folks where the CPA is ultra aggressive. And then, of course, the DSCR loan, this is for investors only, but it allows us to look at the potential rent for a property and not obsess so much about the investor's income and their debt to income ratio. We're looking more at what income does the property generate and is that enough to cover the mortgage. So super excited to share with you more as we roll out to you the different products and how they might fit your client's needs. But big picture, think of us, we have got a much broader range of options to offer you now, and that will come with the same attention to detail, pre-approvals you can count on, and being super responsive with fast closings that you have come to know and love from our team. So as always, we are here to help. Give us a call.